All right, testing, testing. Let me just give it about 2 seconds. I just want to make sure that you guys can hear me good to go. All right, perfect, perfect. So what I'm going to do is, since this video is actually going to be recorded, I'm actually going to just begin from now. And for those individuals who join in late, or if you're watching the replay, you'll be able to just follow along with the overview of the markets and the dashboard that we're going to be doing tonight. So let me actually share my screen and we'll be getting started. All right, perfect. So let me just confirm that my screen is good to go and that you can see it. For those individuals who are watching, you should be able to see the setup that I gave yesterday, which was Euro JPY. Now, what I want to do is definitely, first off, review this setup and actually show you guys why it moved so much more, but at the same time, why did we decide to get in at these specific points? And then, of course, we're going to go and analyze a few other markets on the charts as well. So first things first, Euro JPY was a signal, a trade setup per se that I sent out, where just by doing a very basic analysis, we saw a few things. We had this orange zone that, as I was explaining to you guys, it was showing resistance in the market, resistance in the market, and resistance in the market. We are definitely looking for this market to obviously break, because once you break resistance, it then becomes support, which you can see that this market then served as a support and clearly grew it to the upside. Now, one of the main reasons I did choose this pair is because I actually was using the dashboard, and here, let me show you guys the image that I saw from the dashboard, which looks something like this, where I could have taken all four trades, but I just decided to do Euro JPY because it looked nicer. And clearly, I want to show you guys where the other pairs were at from this dashboard setup. So if we actually go to Euro JPY, this was actually the spot right there that I saw it. I clicked it. But going into AJ or NJ, the same spot that we got the analysis to look for the buys was at this point right there. With AJ, it was at the exact same point right over here. And for UJ, it was actually at this point right here. That UJ was actually going to be a setup that I was going to send you guys, that if it would have been, it would have done exactly what I needed to do, where the setup actually came in exactly at this point right here, telling us to look for buying power. But as you can see, it's not just to look at the setup on the dashboard and just buy or sell, but to then evaluate the market conditions and see how is the market going to react. Clearly, what did you see the market do? It consolidated a little bit. It was holding that zone, but then finally broke that zone. Then clearly what was happening here, resistance, resistance, resistance. It broke that resistance, became support. Now you can also see that this is a trade that started yesterday, but of course continued throughout the day today, where with this UJ, this yen definitely had a nice push to the upside there, which was of course the same push that you're going to see on these other pairs, as AJ did right there, as MJ did right here, and of course as EJ did right there. Now, the main reason that I wanted to just take it into this specific area, you notice that we did have our zones, is because before you can push for 50, 60, 70 pips, there are still going to be levels that the market's going to respect. Clearly, you can see that the market pushed to the first zone, then pulled back, pushed to the next zone, then pulled back, broke the next zone, then pulled back to then continue. where if you would have held that trade, it would have been up 70 pips. So nonetheless, when you're looking at the dashboard, I want you guys to realize that it is going to be a helpful tool for you to identify which currency pairs are best or ready to get in and out of. But at the same time, before you even enter in on a trade, make sure you do the proper analysis so you know what type of setup you're looking for. So before we even go into the dashboard today, what I'm going to do is I'm actually going to erase a few of my currency pairs. As you can see, I'm using TradingView, which is a very user-friendly platform. At the moment, I do have my MetaTrader 4 running, where I'll bring up the dashboard, but we'll do that soon later. Now, for tonight, I want to take things a little bit more simpler, more easy. I don't want to go straight into any advanced technicalities because I know we have people from all different types of background when it comes to trading. Now, the way that I actually want to set this up is beginning July 1st. So this upcoming week, I want to do like a 3-month testimonial program. So what that means is we're literally going to be trading together. We're going to have these type of sessions where you guys can ask some questions, analyze the charts, but hopefully, you know, within these 3 months, you'll be able to get a better grasp on Forex, you know, and have the opportunity to grow your accounts as well, because I'll be sending out some trade setups and such, also from the dashboard and from what we break down. So what I want you guys to be aware of is, let me just double check over here. Let me actually get into MyFX book because I want you guys to see that this program or this website is going to be very helpful for you. Let me screen share. All right, perfect. Now, if you guys go to myfxbook.com, the first thing you're going to notice on the main page, or even when you go to home, is they have an economic news calendar. Remember, no matter what day you're trading, no matter what session you're trading, the first thing you want to know is there going to be any type of impact news on the markets? So for example, currently, since we're trading the London session, you know, you can see that there are some small news events that are going to occur, some as soon as 18 minutes from now, others 2 hours from now. And then you can see that right here, we have a lot of high impact, medium impact, high impact, which is going to be during the New York session, which is 5 hours from now. So make sure you guys definitely are aware of that, because that can create a lot of volatility in the market, especially when there's these high impact news events. Now, aside from that, when you go on that home page, if you're ever confused on what session you're trading, you can actually look at this little widget and you'll be able to see what session you're currently in. So currently you're going into that you're in the Tokyo session, and we're actually going to be moving into our London session. That from the widget, it states it opens in 17 minutes. Now, no matter what session you're trading, this is important because, for example, if you're trading the Sydney session, this is going to be when you're going to worry about your AUD pairs and your NZD pairs. When you're trading the Tokyo session, this is going to be when you're worrying about your JPY pairs. When you're trading the London session, this is going to be where you're going to be trading your euros and your GBPs. And then when you're trading the New York session, you're going to be more focused on the US dollar pairs. So if you ever notice that a session is overlapped, such as the New York session and the London session, that would be a chance for you to not only focus on your euros, your GBPs, but also your USDs. As well as when you're looking at the Tokyo Sydney session, you can get those mixes as well. So if you ever have any doubt or you're confused, write those down so you know exactly not only what pairs to look at on the dashboard, but to also understand which base currency is going to have more of the power in these markets. So since we're moving into that London session, what I am going to do is I'm going to hop into some of my GBP pairs. So let me actually grab a few. I know I marked a few up, but tonight, but since we're all back to the basics, I want to make sure we understand, and I'm gonna take off these three. So I have EG, G Swiss, GU, and AUD is already laid, GCAD, I'll leave that alone. I'll leave ECAD alone, EU alone. Remember, it's not the NZD or the JPY period, so I'm not going to be looking to trade those per se at the moment. But this is going to be very interesting. We can look at the Euro AUD, because that will be a currency pair that's going to look pretty nice as it's setting up. So what we have is 1, 2, 3, 4, and then let me just grab one more. Now, as you can see, most of the time when I'm trading, I have some of these pairs generally marked up so I can identify where it's the market's at, what key point or area is around these markets. So that's the first thing that we're actually going to review tonight, marking up a chart and understanding what are a few things to look out for when we're looking at these markets. If you remember, when we were looking at that the Euro JPY, we were understanding some zones, and we were also understanding that the market at one point can serve as a resistance, but as the other, once that resistance is broken, serves as a support. So all of these are little tools, I like to call it, that you have in your toolkit when you're trading Forex. As a carpenter would have their hammer, their nails, their saw, as Forex traders, we have all these different tools that we're putting together. One market might not use all of the tools or all of the technicalities that you might apply to another one. So the first thing I want you guys to realize is when you're looking at these markets, I want you guys to start to look at them big time frames. You know, avoid trading on the minute chart, avoid trading on the 5-minute chart. If you remember on the setup I gave you with EJ, it was on the 30-minute chart. So what I like to do is when I'm looking to enter in on the market, I'm generally looking at the 15 and the 30-minute. Now, when you're looking at these time frames, you're going to literally do a market analysis starting at the daily, then you're going to move down to the 4-hour, then you're going to move down to the 1 hour. And I'm going to show you exactly how we're going to utilize each of these. Now, what's important and key for you to understand and look at when you're looking at these pairs is this first thing that we're going to do right now is the markup process. Before I even look to get in on a currency, before I look to even press buy or sell, I'm going to mark up my charts. So what I want you guys to do is go into a few currency pairs starting this upcoming week, or even now that we still have some time during the week, and try to do this yourself. Starting at the daily time frame, looking at it, there's a few things that I want you guys to be able to know and understand. Like, for example, you're going to have moments when the market is pushing to the downside. You're going to have moments when the market is moving sideways, known as consolidation, or obviously continuing momentum, which is that momentum of going down. When you're looking at these charts on the daily time frame, something that's very important is to see where the market creates wicks. Wicks, these little lines that you have here. The reason I say that is because wicks creates an area of hesitance. Clearly, the market wasn't strong enough to break it, that it reached it and it ran away. So for example, when you actually identify some of those wicks, for example, if you actually look at this market right here, I'm actually only identifying this wick right here from this candlestick. By just identifying this wick, you can see that the market, what happened here? it hesitated, threw it down. In this case, there was some hesitation, then it continued going up, but you can still see that area is relevant to that market. Now, we're not going to go off and identify zones currently, but I want you guys to be on the lookout because wicks are very important, especially wicks on the top as well as wicks on the bottom, right? And the reason I say that is because these are how we're going to be able to look at and understand the market as it's looking maybe to right here, support, support, and then it breaks support. What happens when support is broken? It becomes resistance, 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 right? Once resistance is broken, it became supported, you know? So these are all little things that are going to assist. Now we're gonna go and identify zones on a other time frame, but the daily, the first thing I want you guys to do in this markup process is identify where would you want to buy and where would you want to sell. So for example, looking at the market, it's typically pointless to mark it up all the way up here because the market hasn't even reached. It's hundreds of thousands of pips to get all the way up there. Now, aside from that, what I like to do is, for my daily time frame, I like to use the red horizontal line. For my 4 hour, I like to use the orange. And for my 1 hour, I like to use my green. So when you look at some markups may just have the orange, some markups may just have the green. So you know exactly from what level I marked up that chart. But doing the full analysis markup, as I said, what I like to do is I want to actually click on where the current price is. I'm going to make it red. And we're just going to go back in time and find that red line. Because when you're marking up a chart, by identifying the past price action, it helps you identify potential future moves. So right here, what I want you guys to do now is zooming in, looking at this area, which is actually 2016, 2017, I want you guys to understand and ask yourself, where would I buy the market if I wanted to get in low? And where would I sell the market if I wanted to get in high? So for example, if I was in this market right here, I wanted to buy it. I'd want to buy it all the way up here and get out right there. That would have been the perfect trade setup. And then if I knew for some reason that the market wanted to stop there and it was going to go down, I would have sold it at this point and went all the way down here, right? The same as if you go here, I wanted to buy this market, and since it stopped there, I would have gotten out. And then I would have sold the market and gotten out right there. I would have bought the market and gotten out right there. I would have sold the market and gotten out over here. This is just so you guys can literally understand the structure and how we identify the specific levels. Once you get used to this, you'll see how fast it is to mark up charts, that you can do it in less than 15 minutes. So continuing, if I want to buy, I want to get in here and get out all the way up there. I'd want to sell it, I'd get in there and sell it all the way down there. Now fast forward, I'm just going to do a few more just so you guys can see exactly what's happening. I want to get in, get out. Sell the market right there, get out right there. Buy the market, get out right there. Sell the market, get out right there. And buy the market and get out right there. Now, if you remember, we actually identified this due to where the price was currently, right? Because this current price, this is where the price is currently at. So what I want you guys to now look and identify is when you go to your line chart, right? Because currently we're on our candlesticks. Each candlestick tells you a different story of what's happening in the market. But the line chart looks very simple. Here, let me actually change the color of the line so you can see what it looks like. I'll make it like a dark purple. Or maybe all right. What I want you to understand now is using the horizontal lines. The only thing you're going to identify is the sharp points from where you want it to enter and where you want it to exit. So starting from the left, if we identify those sharp points, there's a sharp point right there. There's a sharp point right here. So you guys can see exactly what I'm identifying. The sharp point there, the sharp point there. Now, since I already identified the one here, I don't need to use this. Now there's another sharp point right there, right? So we're gonna click it. There's the sharp point right there that we're gonna what? Identify that right there. Right here, there's that sharp point right there. Now, if you notice, this sharp point that's right here is already identified with this level. That's already telling you that this area, this level is key, important. So we don't need to identify it again. In fact, there's this sharp point right there that I'm going to identify. And then there's this one up here that we're going to identify. And moving forward, that one's already identified, so I'm not going to worry about it. This one is already identified from the past. You can already start to see how the past is reflecting some of the future, right? There's this one right here. I'm not going to worry about it because it's already identified. Boom. There's this one right there. It's already identified. This one right here is already identified. This one all the way up here is not. So I'm going to click it. So now when you fast forward and you go to where the current price is, we did not, I repeat, we did not identify this. This is all from the past. But you see how the market, what did the market do? It hit that level, took off. It held this level, then made the move. It decided to stop right here at this level before making a move going up, right? So what you start to see is how that past price action helps you identify potential future moves. As you can see, the market came back to this level, then decided to take off. So now you start to get a better understanding of where you should be able to look for the market to buy, where you should be looking for the market to sell. But the next thing we're going to do is go to the 4 hour because we're not done yet. The great thing is we had some levels above the market, we had some levels below the market. If you notice, I'm going to click where the current price is. Since we're on the 4 hour, I'm going to make it orange. I'm going to go back in time. Find the orange line. I see the orange line right here. Let me see if I can go any more back in time. Oh, there it is. What I'm looking for is I'm looking for the price above, price below. And we're going to do the exact same thing. You ask yourself, if you were to get in on the market, where would you want to get in? Where would you want to get out? If they are already identified by the red line, that's the daily level. You start to see that how important is this daily level? Very. If the market came there and rejected it, boom, and took off. What if you would have known that the market hits this daily level and then went all the way up, right? Just by doing a very simple trend line break right there. Boom, let's buy that. All of this is how we're able to analyze the markets more effectively, especially when you're trading in the right session with the right pair. So reviewing what I was just telling you, I'm just going to do this real quick. I want to get in here. I want to get out there. I want to get in here. I want to get out here. And if just fast forward that, what we're really looking for, honestly, is once we identify this, is the sharp points in the market. Clearly, all the way down here, it's already identified. So I'd want to just identify that one because clearly it stopped right there, then went down. Like right here, the market stopped right there. I'd want to get in there, stop it right there, get in here, get out right there, right? So when we go to the line chart, what are we really just looking for? The sharp points at the areas where we would have gotten in, where we would have gotten out. So there's a sharp point right there. There's a sharp point right there. There's a sharp point right here. That one's already identified, so I'll let it go. There's a sharp point right here. There's the sharp point right there. Now I'm going to just fast forward. There's a sharp point right there. There's a sharp point right here. If you're ever hesitant on what sharp point you should identify, just go to the candlesticks. Because now you're going to notice from the orange lines that I identified, now they're important. For example, you see how the market came to this level and stopped, came to this level and stopped, came to this level and turned around? That shows you that those levels are important. So when you fast forward and you go back in time and you go to the future price, remember, this, I did not look at this. Now ask yourself, are some of these levels important where you see the market reach a level, make a move, reach a level, make a move? Now let's just fast forward that to where the current price is, and look, you see it reached this level, then made a move. It started what? It bounced between these levels right here. Look at what all the market was doing, consolidating. So you're now starting to see a little bit more of how that market movement is. And now this is where we're currently at. Now I'm gonna just fast forward this bad boy a little bit, because now that we're on the hour time frame, this is where you get to fill in the rest. And when I say you fill in the rest, if you go to the line chart, every other sharp point that there is. So what I'm going to do is I'm just going to click here because that's where the price is currently at. I'm going to make it green. I'm going to look for my green line. And this, I repeat, this is the only time. Any other sharp point that you see, like right here, boom. Starting from the left, like right here, there's a sharp point. You identify it. You click it. You click it. All of them. Because now this is where you're going to start to see that the market's moving from level to level. Now, if you look at all of this and you see and you ask yourself, what is it really doing? You go to your candles. Well, it's just bouncing between these levels. Everything looks already identified. So I don't need to identify too much more. Moving on, there's a sharp point right there. Moving on, there's a sharp point right here, right? So when you move and you fast forward now to the current price, if there's anything that you're missing, which it looks like we're not, there may be some levels all the way up here, but remember, the market is not even near all the way up there. This is now the point and the opportunity where we have the market, the markup. So now, what's the next thing that we're honestly going to identify? You remember those wicks we were talking about? Those are called zones, because the market may want to stop, consolidate before making a move, right? What I like to do is, this is when I go to my 2-hour time frame, because I like the wicks. The wicks tell me a story. Where was their hesitation? Where may the market potentially pull back to, right? For example, when we're looking at, let me see, this is an old example, but you can see right here, the market broke to the downside and it pulled to a zone. Then what? It pulled to another zone. Then what? Came to another zone. So these were all moments in time that you're starting to see that the market is reaching areas, making moves from some of those areas. So what I'm going to do next is, going back to this GBP CHF, I want to identify some of those zones. If you're on the 2-hour, fine. If you're on the 4-hour, that's great as well. But what I want you guys to look at is, you ask yourself, Anthony, where do I grab those zones from? Grab the wicks, only the wicks. So you grab some wicks, right, in the market. And you grab wicks, right? The best thing to do is, if you can grab some wicks from the past, that's great. But with the square, all you're gonna do is double click it and make the coordinate above 1500. So it's going to expand everything to the right. So now you start to see, what did the market do right here? It was supporting this zone, supporting this zone. It broke that and then came over here to serve what? A support that's broken became resistance. So I'm going to do the same with this. I'm going to extend it. I'm going to do the same with this. I'm going to extend it. And now you start to see, for example, right here where the market pulled back, it was what? Support, 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 support. All of this was now an area for you to understand and look for a sell. Now continuing, what's left? You see these wicks over here? What happened when I extended it? At one point, the wicks were serving as a support, but now what is the market doing? It broke it, it was resistance. And then finally, we have this area, this zone, right? And this is where it gets really important, because this is where the price is currently at. Now me, I like to keep my zones thin, because now you start to see, like right here in this case, the market may make a move to one area, then pull back. May make the move to the next area, then pull back, right? I like to have zones not only above the market, but under the market as well. So let me go into my 2 hour and see if there's any relevant zones that I may like, that I may want to look at, right? And I want you to be advised and be aware. Look at right here. You might ask yourself, but Anthony, this was all supportive. It breaks the support. What happened? That the market went a little bit overextending that. What do we have here? Wicks, right? Those wicks are important, because now you start to see it showed that hesitation to that zone, that area. Now, aside from that, what other zones do we have? Well, we have this wick right here where I could extend it. And not only does that wick serve an importance, but look, it also applies to this wick. It also applies to this wick. So now, all we have done is identified key levels and key zones. This is important because now when you go into the markets, you can do everything else that you've learned. You can start identifying trend lines, right? And you're asking me, why did I identify this trend line right here? If you notice, the market, it broke it. After the market breaks a trend line, it usually likes to what? Pull back. So seeing that the market is currently here, when you're looking to buy or sell the market, you want to get in the best possible position. For me, if the market were to pull back maybe to this zone, retesting that, this would then be the best possible position to want to take it up more. So I'm going to be a little patient currently, because I believe that the market may want to pull back a little bit. This is where it's key to go through the learning school, because now you can apply some of those other tools that I mentioned, one of which is Fibonacci. And if you actually know Fibonacci, the market usually likes to pull back or retrace to specific areas. The 38.2, which is right in line with the zone, or the 50%, or the 618. So I'm being very patient, because seeing that pullback to then continue it up is going to help me minimize my risk, maximize my profit opportunity. So for now, I'm not going to just get in once I see it there. I'm going to look for the market to show me rejection off of this level. So G-Swiss is actually, I'm going to leave it alone. Now remember, what currency pairs are in charge right now? The GBPs, the euros. So if the GBPs are all together, you got to watch them. And this is where you would do the same thing. You start off at the 4-hour level. And this is how much faster it is when you really get the hang of identifying the places you want to identify your levels. You go in time, you go back, you go to the line chart. You already know you're looking for those sharp points that are going to serve importance of levels, starting from the daily to the 4 hour. Now in this scenario right now, you notice that I just started straight with my 4 hour level. Yes, you can do that from time to time, but the reason that I like to start at the daily is so you can find and see those bigger moves. Some levels that you identified might not be the exact same levels someone else identified, but the key thing is that look, once I identified it, now I start to see what? How the market reached this point, pulled back to this point, reached this point, pulled back, consolidated between this area. Then what? Made a move down here to this area, came up. So for now, we can do the exact same thing. We have some levels identified. We can go into the 1 hour, and this is where we're going to fill in everything else. Let me find that. I'm going to make sure now at the 1 hour, starting to click all my sharp points, because now that helps me see where can I get each push and reach this market too. Clicking those sharp points. And if you're ever hesitant what sharp point you should click, you go to your candles and you ask yourself, from what I have identified, is it relevant? Did the market stop? Did the market hold there? Fast forward it to the future. Is there a point that the market was holding as a resistance or as a support? So the next thing we can do is I'm actually gonna identify my 2 hour, and you can go into the 4 hour as well, because this is where you're gonna go in and you can identify what? The wicks. Why? Because remember, what's happening here? Resistance, 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 resistance. So when the market reached that same area again, resistance. So this is all patience. And what may the market want to do? Maybe it just wants to push to that next level. So you want to make sure to identify your wicks above and below the price. And they have to be important wicks. You're not just identifying any zones. They have to be important. The thinner, the better. When you can go into the 2 hour and still see that how those zones are relevant, very important. You can see right here we have some wicks. But what I like to do is when you can identify wicks in a group together that are serving a purpose, those are going to be great. All right, perfect. Now, this is where the next and the final thing we can do, of course, is look for any trend lines that we may possibly have. But in this scenario, you notice that we've had sideways momentum, consolidation. If anything, the only trend line you might be able to identify is this one right here. What did the market do? It broke that. So we need to ask ourselves two things. Is this market looking to retest that to go lower, or is the market really just looking to go higher? So before we can do anything, I just want to make sure that we go in and look at all of these pairs. We got G-Swiss already marked up. We got GU already marked up. We're going to be able to see a little bit more of a clear picture. If you notice on this 2 hour, there's actually a zone of wicks right here. You're going to start to see a little hesitation to this zone. What I mean is, if you notice hesitation here, hesitation here, hesitation here, hesitation there. And it helps me because a zone helps you really see where is the market at. For example, If the market breaks above this zone and comes here, now you know it might just stay here, relax here, then maybe you want to go higher. But if the market reaches this zone and is hesitating and then throws it down, now you know based off of that, maybe it's looking to come a little lower. Right? So it helps you have a reference to the market. Now, let me go in. I'm going to go in on, I'm going to grab another pair. I'll talk to you guys about EA real quick, because if you notice, I did identify some daily levels, which are red. I did identify some 4-hour levels, which are orange. And the good thing about your markups is when you identify them, it usually lasts you a week. So what's left? My 1-hour levels. So let me just identify those, and then we can have a clear picture with this markup. This is the beauty of technical analysis before anything. It's great and all to see the market move big and large amounts through news events, but news doesn't control the markets. You need to be able to see and understand how the market's making moves, pulling back, reaching areas. And remember, all I'm doing on my 1 hour is identifying the rest of the sharp points that I see that the market may have reacted to. If you're ever hesitant, you go to your candles and you just look. It's not going to be perfect, but all you're looking for is, did the market react off of that level, make a move? In this case right here, you want to make sure you do identify everything. You know, if you can go back in time, great. If not, you have to deal with what you do have. Like right here, this sharp point, and identifying it. So I'm just going to talk to you guys a little bit about EA, because EA is very interesting. Now, the key thing is, I want you guys to truly go through the learning school for one main reason, and that's to grab and understand all the different principles and technicalities I break down. For example, Fibonacci, how the market moves, because this is actually something where the market's been moving up. Let me just show you guys. And it's been failing. It's been failing, and breaking higher. So you already know right here, this is an uptrend. At any of these points in this market that I drew, you would be looking to go higher. Now, the moment that you actually notice that this market wanted to stop and potentially turn around was right here when it did this, because it broke that level, which was a low. So it created a new low. It failed the high. Look what it just did, created a new low. So what you're potentially looking for the market to do is come up and fail the high to go lower. Is this going to be something that occurs overnight? Possibly not. As you can see right now in the London session, it might want to come up, and then later throughout the week, maybe next week, want to make that move down. How do you know where do you want to take it to, or where you're looking to get in at? That's where Fibonacci comes in. Not only that, but remember, go to your 4-hour, identify zones. Where do you see the market showing hesitation? Wicks. Okay, wicks. From these wicks, I see that it broke it, retested, held it. So this now helps me see that clearly the market is what? Below it, right? If the market wants to break above it, now we can see the reflection of it's coming back to retest to go higher, to maybe come to another zone, another area of hesitance, right? And what's another area that I see wicks at? Right here. So as a trader, when you have a market that's creating momentum, where are you looking to get back in? Fibonacci at the 50, at the 618. So when I throw Fibonacci from this point to that low, where do you see the 50, the 618, in line with that zone that we identified. Here, let me show you guys. You see the 50 is right here. Boom. So this would be that golden, that the best opportunity that if I wanted to sell the market, I would have wanted to get in up here to then take that area lower. Right? So this might be a setup that we'll be looking later on. You know, currently I don't suggest going against the trend, but that market may be pulling back to this area. It may be pulling back to that 382. This is all great. Why? Because it's already marked up. So for next week, we already have an understanding of what to look out for in the charts. Now continuing, we got one chart marked up, we got another chart marked up. Look what GU did. It hit that zone, and look, it rejected it. You know, it's not just about buying it at any point. No, you want to buy at the best point, sell it at the best point. And that's what these markets and these markups help you do. Now, tonight, let's see. It doesn't look like we have anyone on currently, so I'm not going to talk about the Easy Pip dashboard. But for those individuals who have the Easy Pip dashboard, here, let me show you guys something. Let me actually bring it up so you guys can just see what it does. I currently have my MetaTrader up just because I'm running a software that I'm developing. You know, it's pretty much teaching a robot how to trade. So if this actually is successful, actually, let's see how it's doing right now. It's currently up $65. We'll see. I'm gonna just keep running it for the rest of the day, maybe the rest of the next few weeks. But if this is a success, you know, I'll definitely introduce you guys to this. But this is just work behind the scenes that I'm doing because I understand everyone can't trade 24 hours a day. So going into the dashboard, like I mentioned, this is going to be a tool that you get to now use and identify which currency pairs are best to get in on. From the image that I showed you guys right here, you see that there's a few important things. These first 3 rows, generally, I like to make sure I catch it from the H1 down to the minute. If they're all green, that helps you identify a bullish market. If you see it on the 4-hour, that just means it's stronger as well. So when you find the opportunity and you can see that it still has space to go up, then you can take it. But let's see if it loaded up. It usually takes a minute or two to load. But the good thing is now the 4th row is going to confirm it. So for example, what's the best thing you want to know? If the market is either bullish or bearish, are there buyers or are there sellers present? If the market is bullish, all green, right? The next row, which is the 4th one, is going to be green. This is where you confirm buyers. So think of the last 2 rows as a light switch. If you have buyers in the market, do you want to have sellers? No. If you have the market that's all red, do you want to have any buyers? No. So the last 2 are just going to be green depending on if there's any buyers or any sellers. The 4th one represents the buyers, the 5th one represents the sellers. So let's get an example over here. USD CHF. You can see it's going to update by the minute. It looks like in this case, these GBPs are trying to give us bullish opportunities, but they're still not there yet. You know, you start to see that it is going to be updating by the minute. So soon enough, if the market does look good, when I say if the market looks good, I'm going to confirm it, right? I'm going to understand and ask myself, based off of the bullish opportunity, where's the best place to get in? Now, in this case, let me see, there is not a current example for the sellers. but I just want to show you guys what it would look like if you Swiss the first 3 rows were all red. Remember, the 4th row represents buyers. So being red, it means that it's off. There's no buyers. But there is what? Sellers, the last row. So the 4th row represents buyers, the 5th row represents sellers. So if you look at GN, you have the first 3 rows that are turning green. Then you have the 4th row, which is also green. That's now helping you identify that that's a bullish market with buyers present. As I'm talking to you, it's good to see that the market's changing because that's what it's doing 24 hours. What you want to be able to do now is still look, and as you look at your charts, you understand, hey, what is the market really trying to do? If it does the pullback, what do you think the dashboard is going to start to do? It's going to start to look a little bit red, slowly red, slowly red. But once it hits a point that it's really ready to take back off, it's going to turn what? Back green. It's going to confirm the buyers. And then what will you do? Boom, that's when you buy it. You know, so the key thing is making sure that you have your markets marked up, that you understand how the market can move. Because now once you have this tool, now you're able to depict which currency pairs are ready to get in, which ones are ready to get out. Currently, the GBPs, they're still not truly ready because they would have all been looking the same. And as you can see, the buyers are losing momentum. It's starting to turn red. In USD JPY situation, you can see that there is some selling, there's some bearish opportunity, but is there anybody actually selling it? Only on the minute and the 5 minute. So there still is not true people selling this market. So that I would stay away, not yet selling opportunity. So that's the great thing about this tool, because not only it helps you identify a bullish or a bearish opportunity, but also an opportunity where you can confirm if there's any buyers or if there's any sellers present. So I hope you guys took advantage of this. In this scenario, I will be looking to send a setup with this GBP Swiss for you guys. If I see it, I'll send it. If not, I'll wait for the next one. But I hope you guys enjoy, and I'll see you guys on the next one. Take care.